poll. What is your market exposure, if you don't mind sharing with us? It's all anonymous. Today, IBD went back into a confirmed uptrend. Before today, it was uptrend under pressure, but we've been in an uptrend the entire year. Never once have we got into a correction stage. So go ahead and click on that if you don't mind. We had 75% participants so far, so I'll give it just about 30 more seconds. Just interesting to see. I think I heard the IBD guys say that in one of the segments that they're managing, they were 80% invested today. Okay, we've got 83 participants, so I'm going to end the poll so we can keep momentum going here. I'll show you the results. So 8% are 0 to 20, and we have 12% that are either 100% on margin, and then the majority of the people are 60 to 80%. So that's an interesting thing to see. And I think those of you that are invested were smiling by the time the market closed today. I was smiling, I know. Give me 10 more days this year like today, and we'll be in great shape. So let me go back to the agenda. Can you see the agenda? Yes? No?
No.
Nope. Okay.
I'm sorry, Floyd. I had a family interruption. You going back in?
Okay. See the agenda now?
Not yet.
No. What is going on here, folks? I'm going to share my screen. The reason I'm going to show the agenda is
There we go.
we've got something I wanted to show her. You see that now?
Yes.
So on IBD Live, let's do the disclaimer here. Everything is for educational purposes only, for what I say, what our guest speaker says. We're not in any way intending to say what we're saying is a recommendation for buy, hold, or sell. All investments have risk, et cetera, et cetera. If you agree to everything on the disclaimer, you can continue to participate. If you don't agree with the disclaimer, then we would suggest that you sign out. But IBD Live let us know that they had their 40th anniversary on April 8th. This is a image of the first edition of the paper. And I think I've been reading the paper 30 years or so, but it was very interesting to see this. And then the other thing, we had a good day today. I was going to show you briefly that year to date, this is the performance of leveraged exchange traded funds and notes. And so you can see that it was 51%. Yes?
Sorry, just to let you know, I found the waiting room thing and I just let about 15 or 20 people from the waiting room to join. So if that 15, 20 people just joined.
Okay. Thank you. And it says there's 4 more.
Yep, I'll get those.
This is just a year-to-date performance. If someone bought on December 29th and held FNGU, you're up 51%, SOXL 45. This is as of today's closing price. FAS 21, the 4 X's, which is the S&P 500 times 4, 28%, TQQQ 21, and et cetera. So tonight we're briefly going to introduce our guest speaker, Vibha. Are you able now to see the big picture there, Rick?
Yes. It's blowing up so we don't see the whole.
Today, I'm just going to briefly, I'm not going to do the whole thing, but I recommend you do the big picture every single day that the market's trading. As today we had a Dr. Jekyll and Hyde stock market type rally after sharp losses yesterday. The stock market breathed a sigh of relief after latest reading on wholesale prices generally came in softer than expected. If you read down a couple paragraphs, NASDAQ 100 performed mostly in line with the composite. Semiconductor stocks like Broadcom, NVIDIA, Micron were among the best. If you look here, we're now uptrend resumes. Today, techs bounce after sell-off in the market pulse. But we have a very high distribution count. It makes me a little nervous to see 7 NASDAQ and 8 on the S&P. But I recommend you read this every day. I recommend you watch this video. You can watch it at 25 or even 50% faster than real time. So what we're going to do now is I'm going to introduce our guest. Vibha is our guest speaker. I think most of you saw her bio, but briefly, she spent 20 years at Aetna, a senior leadership role, led some major business strategies, and said that key accounts generated $4 billion in annual revenue and $400 million after-tax earnings under her leadership. While at Aetna, she had the honor of visiting the White House to present successful private sector wellness initiative to members of Congress, White House staff. So she left Aetna in 2013, and she wanted to start pursuing investing full-time. She's been a top performer in the United States Investing Championship for 3 years. She was number 9 overall in 2020 with 155% return, number 2 in 2021 with 100% return, and number 2 in 2023 with a nearly 70% return. Viba uses TQQQ to help boost her investing performance. Viba, I'm going to turn it over to you. You can share your screen. If you click on share screen, that would bring up your slides. Go ahead and do any other introduction you want to do and let us know how your day's going. We had a Zoom meeting recently and traded some emails, and I feel like I have a new best friend out there.
Thank you, Floyd. Are you able to see my screen?
Yes.
Okay, excellent. First of all, thank you, Floyd, for inviting me. I also feel like I have a new best friend in Alaska, so I'm excited to meet with all of you. I mentioned to Floyd that although I love investing and trading, I don't really have investing or trading community around me. So being able to participate live with you guys is very exciting. I really would like this to be as interactive as we can be with such a big group on Zoom. So I have just a couple of very basic slides. I want this to be more conversational, but feel free to ask questions at any time. I've asked Floyd to interrupt me because I probably won't be paying attention to the questions in the chat. I want you to feel free to interrupt anytime. Floyd did provide some of my background, so I won't rehash what he already said. One of the things that Floyd asked me to talk about today, one is particularly because this is the IBD meetup group, to share how some of the IBD tools have helped me in my investing journey, and then also to talk a little bit about my TQQQ strategy and how I've used that. Besides the professional information that Floyd already shared, I grew up in a family that did not really do investing. My family were immigrants. I was born in India. I came here when I was 3. My dad definitely taught us good, sound financial principles in terms of staying out of debt, saving money, spending less than we earned, being responsible that way financially. But really, he didn't do any stock trading. So any of the investing that I did at the beginning of my career was basically just the 401k, buying whatever 401k funds were available through Aetna, and that was pretty much it. And my first exposure to actual stock trading came when one of my brothers, he was hired by Goldman Sachs. He's a computer engineer. And when he started at Goldman Sachs, he became very interested in technology stocks. This was in the mid-90s. He kept telling me to buy Microsoft and to get involved in individual stocks. I just wasn't comfortable with the risk. Finally, in 1999, the brother who worked for Goldman Sachs, he had since quit Goldman Sachs to start his own startup company. And they went IPO in September of 1999, along with so many other internet-based companies. We were early investors. I was also on maternity leave at the time. I had CNBC on in the background, and every day we would watch this IPO sometimes go up $30,000, $40,000 in a day. We didn't have very much money in the market. Pretty much the only thing we had was this IPO. I saw how well the IPO was doing, and I thought, I don't understand why I'm so nervous about investing in stocks. So, I'm going to buy Microsoft, which my brother had told me about 4 or 5 years before. So I bought Microsoft in December of 1999, and I lost 80% of my money in Microsoft and pretty much everything in the IPO because we were friends and family. So we were in the lockup period. It was a humbling and heartbreaking experience to get in the market, just lose everything. But I think it was a very valuable lesson. It happened early enough in my investing journey that even though I lost almost everything I had put in, I still hadn't put in that much. At that point, I made a commitment to learn. And that's what I did. So for the next 10 years, my journey was very slow. Some of you may have seen the YouTube video I did with Richard Merlin, so I apologize if some of this is repetitive. But I think it's helpful to have this context because So many people want to make money overnight. And what I want people to understand, which I'm sure many of you do already, is that it takes years. Somebody may make money in a very short number of months, but many times they're going to give it all back. It is really a journey. It's not a short-term fixed kind of thing. So for 10 years, from around 2000 until 2010, my journey was very slow. That's because I was growing my career at Aetna. I kept moving into higher leadership roles, which took a lot of my time. I was working 60, 70 hours a week and raising a young family. I had very little free time to put into investing, except for when I was traveling, I would read books, or when I was on vacation, I would read books. It wasn't until around 2010, somewhere around 2010 or 2011, definitely after the market crashed between 2007 and 2009, that I came across Investors Business Daily. At that time, I was putting half of my money dollar cost averaging to S&P 500. It was a Vanguard mutual fund at that time. And then I was putting the rest of my money into a brokerage account where on a quarterly basis, I would start buying individual stocks. And I used to really pay attention to fundamentals, to earnings, to valuations after what had happened with Microsoft when I bought a great company, but it was at the wrong time. So I was really trying to focus on valuations. But when I came across Investors Business Daily, that was my first exposure to understanding the role that technicals can play. Even though I still didn't have much time to put in the market, even when I was looking at it on a quarterly basis, what I soon came to realize is that when I waited to buy a stock until it was emerging out of a sound base, and when I waited to buy a stock until the market was in a confirmed uptrend, I significantly improved my results. After 3 years, around 2013, I was able to generate as much money from investing as I was through my role as a vice president at Aetna. Well, I decided, okay, I'm going to take a couple of years. I'm going to quit. I'm going to see if I focus full time on investing. So I really tried to internalize everything that was in how to make money in stocks and really understand all the tools that IBD had. Hopefully, then I don't have to go back to work. So 2013 onward is when I really got into investing on a much more frequent basis and learning all of the IBD tools. In terms of the competition, thank you for sharing my results. I did want to quickly mention 2022 because I didn't enter the competition in 2022. And the main reason was at the end of 2021, it felt like a lot of stocks were overheated. We had been in, like 2020, 2021, a lot of stocks went up a lot. And because I didn't have any new money coming into the market after 2013, usually every year at the end of the year, I do raise at least 3 years worth of cash because you never know when a correction is going to happen. And so I was in quite a bit of cash at that point, and I wasn't finding anything to get into. I was basically flat in most of my accounts. Some of my accounts I was down a little bit, but I chose not to trade competitively that year because I just wasn't finding companies that met my criteria from a market perspective as well as an individual stock perspective. So that's just kind of my background. So let me get into my presentation. I only have a few slides. Start with the disclaimer that this is for educational purposes only. A lot of what I'm sharing with you is what I learned from trial and error as an individual investor. My background when I went to college was in political science and Spanish. I never took any finance classes. So it's more just what I've learned through trial and error. Let me start with the tools from Investors Business Daily and Market Surge that really helped me. The first thing was the Market Pulse, which Floyd talked about too, that every day read the big picture. Market Pulse, I look at on a daily basis, and I'm really looking at both what the market direction is in terms of, is it a confirmed uptrend? Is it under pressure? Is it a correction? But I'm also looking at the number of distribution days. I'll talk a little bit about this when I go into my TQQQ strategy, but I start to get defensive once the distribution days around 4 or 5. Right now they're at 7 or 8, but I start getting defensive a little bit earlier in the process. I also use the weekly paper. One of the things that's interesting is that if I look at the front, it's actually the front page of the second section where they have the IBD 50 and the top 15. When I look at the top 15, which I did last weekend, there were only 2 stocks that were in buy zones out of 15. There were 2 setting up in bases, and the remaining were extended or in the profit-taking zones of above 20 to 25%. That tells me the market is likely extended, and I'm trying to get more defensive. I do use IBD screens. There's only 3 that I focus on. For most of my career, I didn't use Market Surge or Market Smith. I was able to get a lot of my ideas through just these 3 IBD screens. One is the IBD 50. I like the top 15 as my gauge for how many things are really setting up, but I will buy things that are not in the top 15 if they're in the IBD 50. I also look at sector leaders and IPO leaders. If there's overlap among those 3, that strengthens my conviction. And then when I initially started my investing with IBD, I did look at the IBD stock checkup. That's because I didn't have Market Smith at that time. And so the stock checkup had a lot of good fundamental information and showed a lot of the criteria that Bill O'Neill talked about and how to make money in stock. And then the final feature that I use from Investors Business Daily, pretty much I'll check it on a daily or weekly basis, are the put call ratio and the bulls versus bears. The put call ratio, typically when it is above 1.15, IBD has said that that can be signaling that we are, near intermediate bottom. And then also the bulls versus bears, when it gets above 60%, it's pretty frothy and it's more likely than not that the market will pull back. And again, there's no guarantees on any of this, but having worked at Aetna for a long time where we really had to manage risk and do projection, I go by probabilities. So when I'm looking at whether to get in or out of the market, I'm trying to look at what is the probability that it will go up from here, or what is the probability that it may go down based on some of these different criteria that I mentioned. And then I started using Market Smith at that time, beginning in 2019, which is when I decided that I was going to enter the competition in 2020. The year before, I was really starting to prepare and learn as much about technicals as possible. Market Smith helped me with the weekly and daily charts. I was able to put in my own key moving averages, including 10-day and 21-day exponential, which are more relevant for shorter term trading, which hadn't historically been the way that I traded. I also use their pattern recognition feature because as I was learning how to interpret charts and interpret the chart action, having that pattern recognition feature was also, it helped me understand the patterns a little bit better. I was able to use Market Search to do price alerts, so I didn't have to sit in front of the computer the whole day like I would get an alert when stocks were approaching either a buy point or a sell point. The final thing I use Market Search for is the comparison chart. When Floyd went through various leverage ETFs, he showed the comparison chart. You can plug in whatever tickers you want, and it's going to show you over whatever period of time you're interested in how they performed relative to each other. And I use this tool primarily on a monthly basis because I want to see among the individual stocks that I'm holding, as well as with TQQQ, how are they performing relative to each other? When the market is kind of going sideways, some days it comes down, then it goes up, then it goes down. It's trying to find a direction. But if I want to be able to get out of something quickly, if I've done the comparison chart, I already have some sense of what my weakest performers are so that it doesn't take me that long to make a decision if I need to scale out of something. I already have something that I want to scale out of. Those are some of the IBD and Market Surge tools that I've used that I think have significantly helped me with my competition performance, but they've also helped me in terms of my overall investing journey and being able to do this full time instead of working for Aetna. Any questions on that before I move to the next slide?
You say, Viva, this is Floyd. I got a question. When you're involved in the contest, how stressful is that?
It is stressful for a couple of reasons. One is because people should be reporting their results on a monthly basis. I've never been a monthly trader. I've generally been more of a quarterly trader, or most of the time I'll try to hold things for at least a few quarters. Because of the roles that I had at Aetna, when we're looking at it as investors, we're looking at earnings, we're looking at sales, they're just numbers on a chart or on a screen. But when you're actually in a leadership position or an employee at the company and you're trying to drive and generate those results, you can have a great business strategy, but you don't accomplish your result in just a quarter. So in order for stocks to be able to really grow over time, you have to give them time. So I've always been a longer term investor, but having to report numbers on a monthly basis, it was a little bit of an adjustment for me. And the other place where I feel like it's stressful is because you really don't know where you stand until the numbers come out. There's always that fine line. For me, I can give you a perfect example. At the end of January, locked in my TQQQ gains in my investing championship account in our regular account that we live off. I didn't, because overall, even though there were some signs that it was, kind of short term reaching a high, or short term it was going to have some weakness, the market was still in an uptrend and we were having higher lows. It didn't seem like it's something that's going to come down hard. But when you're reporting results on a monthly basis, and it was January 24th, and I thought, okay, I have to report results on January 30th or 31st, I wanted to lock those gains in. So it did change a little bit of my trading approach.
Does anyone have questions there, Rick?
I'll start with my question, which is, how big of a risk was it for you when you decided to go full time, when you quit your job and go full time trading? And I think about that as a possible future for me. I get very scared, but did you plunge in? And when you look back, was it more of a risk than you thought at the time?
It actually turned out to be less than a risk than I thought, but primarily, but let me kind of give you, so at the time when I made a decision to do that, my income was like 80% of my family's income. The huge risk was that we were going to potentially be taking an 80% pay cut if I wasn't able to deliver on what I wanted to do. Around 2010 is when I had set that goal for myself. I loved my job, but I also wanted to be around more for my family. I was traveling all the time, and I didn't want to do half-assed job in my job, so I was kind of 100% in. I had started saving capital for a number of years before I quit my job. At the point that I quit my job in 2013, we had 2 years of cash set aside. My husband was still working at the time. So I thought, if the cash runs out, then I have to go back to work. But at least I had a 2-year window. I also got lucky because at that time we were coming off of, remember, 2007 to 2009 was horrible, but then the market did turn around. And even though there were pockets when it didn't do that well, at the point that I left my job, I was able to take my 401k and put it into a 401 IRA, or like a IRA rollover, 401 rollover, instead of leaving it with Aetna. I was able to buy individual stocks that I would not have been able to do if I stayed in my regular 401k account. And I didn't have the high administrative fees either. I left at a time where the market was actually like the wind was at my back. I got lucky that way. And because I raised that amount of cash, I didn't feel that pressure of, oh my God, like I have to generate that, which again, feeling pressure to generate returns often has the opposite effect, because then you make decisions that aren't based on fact, data, or rules. You make decisions based on wishing and hoping. I've heard everybody say that's not a strategy. I was lucky that I didn't have that pressure. My husband was still working at the time. So I also had that, okay, like even if we have to tap into the 2 years worth of cash I saved, we don't have to use all of it.
That's a big cushion. Yeah. 2 years cash. That's a great cushion.
Yeah.
Yep. That's okay. Rick Barieski. So I imagine you're in a defensive mode now. And do you also look at sector strength or weakness?
Yeah, I don't look at individual sectors per se, but Bill O'Neill talked about how so much of a stock's move is related to their industry group and their sector. So although I don't look at sectors specifically, I do look at the IBD 50, particularly like the top 15 or 25. Are there certain sectors or industry groups that keep popping up? So that's something that I'm going to pay attention to. Ideally, there's more than one group that's showing strength and that's setting up. So I do look at that from a sector perspective. And when I'm buying individual stocks that are not TQQQ, when I'm buying actual individual stock, I do prefer to buy stocks that are in the top 40 to 50 of the industry groups. Most of the time when I'm looking at sector leaders and IBD 50 screen, a lot of the ones that meet my technical and fundamental criteria tend to be in the top 20 group or less. In terms of the defensive mode, I went into defensive mode at the end of January. And then in February, I couldn't really find a good time to get back in. I'll go into that a little bit more when I talk about my TQQQ approach. In November 2021, I went into defense mode. I didn't get back into TQQQ until December of 2022. In the trading championship account, I got into TQQQ in mid-February and early March of 2023. And then I pretty much held it until July 19th when I was seeing topping signs. Historically, February and August are bad months in my portfolio. So in July of 2023, I got defensive, I got out and started getting back into TQQQ in September. My account did draw down a little bit, but it still ended up recovering by the end of the year. But
in July was really the peak.
The reason I remember the date is because I was traveling. So I remember that I was in Denver visiting my brother, and he also trades TQQQ. And so we would talk about it. And I know it was that week because I was physically there. This year, in January, I got into defense mode. February, I was not able to get back in. But then recently, I've started when it pulled back to the 50-day moving average, particularly after April 4th, we had a bad day, but then it tightened up after that. And so I'm starting to nibble again. The number of distribution days does worry me. I'm talking about TQQQ right now. For individual stocks, I haven't initiated anything. I am in defense mode. But for TQQQ, what I found is when there's 4 or 5 distribution days, that's typically around the time that TQQQ starts peaking. So I start getting out before that actually happens. And then once we're at the 7 or 8 days, I'm starting to look for, is it going to start turning around again? And Floyd mentioned today that IBD said now we're in a confirmed uptrend, but I was starting to see over the last few days that the trading was starting to tighten up a little bit. TQQQ was not undercutting its prior lows. So that starts to give me confidence, nibbling. And then if it starts undercutting lows and it looks like, no, it's heading for another downtrend, then I can get out pretty quickly.
Very nice. Can you discuss moving averages / key moving averages, including percent of extension from key moving averages?
We'll talk about those. In fact, I think the final slide that I have, it's like a snapshot of a spreadsheet that I look at to show the extension and things like that. So if we can just hold that question, I'll talk about that in a minute.
This is Floyd. Several people have asked about TQQ and SOXL, and after Viba's presentation, we're going to have an entire segment on leveraged ETFs. So just hang in there, please.
And the one thing that I will mention about the key moving averages is that for me, the shorter term moving averages are the 10-day simple and the 21-day exponential. The longer term for me on a daily basis is the 50-day, I guess, technically more intermediate, but like compared to the other two, it's a little bit longer term. I look at 50-day and 200-day. And then when it comes to weekly moving averages, I look at the 10-week. I look at the 30-week, which is based on Stan Weinstein's work of the 150-day moving average and the 30-week moving average. And then I also look at the 40-week. So those are the key moving averages, and I'll talk about the extensions in a later slide.
Cool. And Manava asks, can you discuss about buying and selling strategies in details? That's a big, wide-ranging question. If you're going to cover that later.
I can talk about it now. In terms of my buying strategies, let me first talk about regular stocks, and then I'll talk about TQQQ because they're a little bit different. The buying strategy for TQQQ I'll go into in a later slide, but for my non-TQQQ stock, I really follow CanSlim as much as possible. I have tweaked it based on what I'm able to execute and the amount of time I want to spend and the volatility that I'm willing to deal with. But so I start with, again, even though M and Bill O'Neill would say this, that M is at the end of CanSlim, but it's the most important factor. So for individual stocks, the market needs to be in a confirmed uptrend before I even will initiate a position. And also it needs to be in a proper spot on the chart. When I initially started investing in individual stocks, I used to wait for a base breakout. Generally, when you're at the beginning of an uptrend and there's early stage bases, they tend to work more successfully. Over time, I've now started to really pay more attention to key moving averages as well. So I still want there to be a base pattern forming, but Many times I will initiate a position as long as the market is in a confirmed uptrend. I will initiate a position even if the stock is not at a 52-week high or not at an all-time high, as long as I can set a logical stop loss at a key moving average. I prefer to use the 10-week moving average as my stop loss because in a very strong uptrending market, it will hold a 21 EMA. But as we saw over the past week or two, sometimes when it cuts the 21 EMA, it cuts the 50 EMA at the same time. So for me, my learning, at least the way that I buy, is that I try to size to the 10-week moving average. I don't want it to necessarily come down that far, but I want to be prepared that if it comes down to the 10-week moving average, I don't want to risk more than 1 to 1.5% of my overall capital. And if it's very extended from the 10-week moving average, and by very extended, again, this is just my definition. If it's more than 5 to 10% above the 10-week moving average, I won't initiate a position there. I'll just keep an eye on it and wait for the moving averages to catch up or for it to kind of go sideways for a bit. Okay, so that was the market. In terms of earnings, I want earnings to be as high as possible. So the minimum that Bill had recommended, and I know there's different editions, but what I remember was generally 25% or at least 20%, and also looking for some quarter of acceleration sometime over the last 10 quarters. Whenever I've done post analysis on my most successful trade, I have found that at the point that I bought the stock, the earnings were generally 35 to 40% or higher. So even though 25% is the minimum I look for, ideally I want it to be 35 or 40% or higher. And if it is, then when I look at the paper, and I still like looking at the paper because I make all kinds of different notations and I remember them better when I'm making notations on paper than if I just add it to a watch list electronically, remember the tickers as well as if I'm actually like looking at them on the paper. So again, I'm looking for those quarterly earnings and sales. This is another important thing, that if you have earnings but you don't have the sales, I have found that sometimes, and it's not that a company is intending to do something nefarious, but through cost cutting or other things, you can sometimes do things to the earnings that you can't necessarily do with sales, and you can't shrink your way into growth. So I want high earnings and sales. I want both, and ideally some acceleration in both. And then when it comes to N, so N is there a new product? Is there a new service? The N, I rely a lot on what I see around me. So now my kids are in their 20s. When they were younger, I would look at what are they all doing? What are their friends buying? What are the stores they like to shop in? What are the restaurants that they want to go to? In 2020, early 2021, my son was in his 20s. He and all of his friends were into the whole buy now, pay later thing. So that's how I came across Affirm. And Amazon, I think it was Amazon. There were a bunch of like big companies that were starting to use Affirm as their buy now, pay later. So I was like, oh, I need to pay attention to this. Another recent example from last year is my daughter. She lives in Manhattan. Before that, she went to school in Boston. She loved going to Kava. There's no Kavas in Connecticut, which is where I live. But whenever we would go to Kava in Boston or in New York, there would be lines out the door. And we tried the food. We liked it. It's kind of like a Mediterranean Chipotle. When they came out with their IPO, I didn't buy, but they were on my radar because I said, okay, this is something that seems to be taking off. They're planning to expand. I try to look at what's going on around me for the N as much as looking at IBD. And I read New America also. That also helps to get things onto my list. S is for supply and demand, looking at the price volume action. I also look at the accumulation distribution rating, which I like A and B or higher. And then, or I guess can't be higher than A, but I look for A and B. And then I do also look at the up-down ratio. So, IBD or Bill O'Neill recommended that if it's 1.0 is neutral, the more above 1 it is, the greater that, when you're looking at sort of the supply versus demand. So I try to look at those components. L is leader versus laggard. Generally, when I'm looking at a stock, I want it to be number 1 or number 2 in its group. I mentioned on this slide the IBD stock checkup. I haven't used it in some time now because I use a Market Surge instead. But in IBD stock checkup, you are able to see whether it is number 1, number 2, whatever. So I try to find what the leading stocks are. And then the I stands for institutional sponsorship. For me, I look at the price volume action and how it is on up days. Is it on higher volume than down days? If it pulls back to key moving averages, is it pulling back on lower volume? That gives me an indication that institutions are still holding on to the stock. In IBD, you can find some of this too. They also share like how many mutual funds own it. Is the fund ownership increasing quarter over quarter? So I look at all of those components. They are primarily what Bill O'Neill wrote about and how to make money in stocks. And I just tweaked them a little based on when I've done my post analysis, the types of things that worked best for me.
Great. Wow. That's very detailed. Thanks. The next person asked an interesting question. If you were to start today in the investing championship, how would you go about acquiring stocks? And I think they're saying, would you wait for what? Would you wait for what? If you want to jump in and clarify, I guess, like, what would you wait for?
Ulrika here. If you were starting today, would you wait or would you just buy a stock? And if you would wait, what is it that you would wait for?
So I wouldn't just buy a stock. This may be my last year in the competition because I do have a longer term view. The competition is a calendar year competition. It's not even technically 12 months. So like if you're buying something in October, November, it matters where you end the year on December 31st. A stock could have not even really gotten going in a month or two based on the criteria that I look at. So basically what I do is for individual stocks, I wait for confirmed uptrend. I wait for early stage bases. I don't like to buy late stage bases, which is the same thing I do in my non-investing championship account. I won't buy a stock unless it meets my technical and fundamental criteria. The area where I differ for the trading championship versus my brokerage account is I swing trade TQQQ more actively in my championship account. At the end of January, I was seeing weakness in TQQQ, more weakness like in terms of it seems like it was like not able to push past and make a lot of new highs. I wanted to lock in my gains before the end of the month, but I didn't start getting back into it until fairly recently. So I sat out the month of February. In January, I think I had an 18.9% gain. I was like number one for that month. In February, I was in cash. I waited and probably could have bought something, but I just felt like, no, I'm going to only buy things that meet my criteria. And the market felt like it was getting a little extended. So I didn't rush in. Did I answer your question?
Yeah, I think what I'm trying to ask you really is if you were starting today, how would you really go about it? The market's already extended. The best run is already gone, let's say from November to now. Would you really just focus on the three lists that you said? Because I find myself I continue looking for something better.
Yeah. If I were to start today, I looked at the IBD weekly for this week, and of the top IBD top 15, there's only 2 stocks that are in buy zone. Neither one of them meet the fundamental criteria that I shared of the, 25% earnings and sales acceleration. They don't meet that. So I would not, as it is today. For TQQQ, I did start nibbling. When I saw that we had a really bad day on April 4th, it looked like when you looked at that action, it looked like, okay, the market is probably going to go down from here. That's what my expectation was. It didn't go down from there. In fact, it held above prior lows, even though it undercut the 50-day, 10-week a little bit, but not by that much. So I did initiate. If I were to enter the competition today, I would have a pilot position in TQQQ. I would not be in anything else because everything looks extended. And I do hear what you're saying about sometimes it does feel like we missed the big gain. This is just my opinion. I'm an individual investor, just like you guys really have any professional information that is informing my decision. Generally, when the Feds stop raising interest rates and when they are going to start either cutting interest rates or maybe even just leaving them as is, and also from a seasonality or pattern perspective, when we're in a year where there's going to be an election, at least from the stock traders, Almanac provides a lot of seasonal pattern. It doesn't feel like we've yet peaked. Even though the market has made 52-week highs, for certain stocks, they haven't yet gone back to their all-time highs. I would rather be patient and be in cash, even if I am in the competition, and then get in when the probabilities are in my favor. Right now, based on the screens I look at, there's not really anything that, besides starting to do pilot positions in TQQQ, there isn't really anything that's setting up for me in my mind. But again, if you look at others that are in the competition, many people, like there was one person in February, they had like a 61% return. So people are finding things to do. I don't have any new money coming in, and even though what I'm trading is for the investing championship, it's still my retirement money, and I don't want to have to go back to work. So I'm a little bit more conservative that way, that I would rather keep what I have and get in when the odds are in my favor, even though that means I may be leaving money on the table.
Thank you.
But let's keep going here.
So my TQQQ strategies, again, as I mentioned, because I have both a shorter term focus as well as a longer term focus, I do things a little bit differently for TQQQ than I do for regular individual stocks. So the first thing is that I use TQQQ to gain market exposure after a correction of at least 10% or more. So when the market has corrected, which so far the market itself has not corrected 10% or more, we've had small pullbacks. If I'm not able to find individual stocks that meet my criteria, I will at least get in with TQQQ, and then I start selling TQQQ to buy individual stocks. From a shorter term perspective, I do swing trade shorter term consolidations, and I'm going to go into this on the next slide. So I do sell incrementally into strength, and I'll go into that in the next slide. After it has pulled back, I wait for supporting action. I won't buy at the lows. I wait for at least a couple of days of supporting action, which could be a couple of days of higher highs, higher lows, a couple of days of strong closes near the top of the range, even if it was a down day, and support at key moving averages, particularly the 50-day moving average. If it's showing that type of supporting action, I'm going to get in, even though the market may still be pulling back.
Will that be like now, like these last 2 days, we had the support at the 50 yesterday and then a big uptrend today?
Yes. So I did get in when we found support at the 50-day. I'm not in with my whole position yet, but I have a 25% position right now in TQQQ. I go up to 50% in TQ. And again, like I'm not recommending that people do that. It's just what has worked for me, because I am paying attention to selling into strength on the way up. So right now I'm 25% in TQ.
Gotcha. Thanks.
So here are some of the sell signals which I use. And it's funny, when I did my interview with Richard, I literally had these on sticky notes on my wall. There's very few of them. So I break them into offensive and defensive. Offensive is when we're approaching a new 52-week high, then I start watching for resistance. Recently, on March 8th, we hit a 52-week high of 64.13. It has not been able to break that. I will also look at if there's new highs happening in declining volume. So let's say we had that 64.13 and then it did start going up, but the volume wasn't there. I'm going to start looking at, okay, is it going to start to hit resistance? Like, what's happening? I also look for, when it hits resistance, how many times does it go up there and get rejected? So right now around 64, there have been 2 times. One time it went till 64.13. Then fairly recently, like the 3rd week in March, it went till 63.95, wasn't able to get past that. So 64 seems to be that it's able to decisively get above that. To me, is going to signal that maybe we're now getting ready for another move up. I do look at the percentage gain from the recent low to the current peak and whether it's above what the average was. I'll show that on the next slide. If it's extended from the 21 exponential moving average, and when the bold versus bears are above 60%, that's happened twice in like the past 2 weeks. I definitely want to be out before then, at least with the portion that I'm swing trading. For defense, I have 4 to 5 distribution days under defense, but I feel like in the past year or so, or past couple of years, IBD doesn't even put market under pressure until there's a lot of distribution days, like 7 or 8, as we've had recently. When there's 4 to 5, I start getting out. So it's kind of like in between offensive and defensive. Like, I'm trying to get out even before the market is under pressure. Another defensive move is when there's 3 consecutive down days in rising volume. In February, from February 16th to the 18th, and then again in March, mid-March, I think it was the 13th to the 15th, we had 3 consecutive down days, but they weren't on rising volume. And they did end up finding support near the 50-day moving average. So that did tell me that I had to go into defense. If there's like a couple of closes below the 10-day simple moving average and rising volume. So that happened one day on April 4th. And then that day, it also undercut the 50-day and the 21-day. So it hit all three. So that was a warning sign to me. And then finally, if there's a poor close below the 10-week moving average, last week, I believe we closed 0.2%. That to me isn't a really bad close. And the volume wasn't too bad. And it was holding above prior lows. So really, most of my sell signals, at least at end of January, they were triggered, January and February, they were triggered more offensive rather than defense.
I can ask a quick question about that. The SMAs that you're using and the volume you're using, are you using the volume and SMAs of TQQ or the underlying QQQ?
Yeah, when I started, I used to use the underlying QQQ. But for the swing trading, I'm using TQQQ itself. And I know that that might not necessarily be the most accurate way to do it, but that's what I've been doing.
Gotcha, thanks.
Any other questions? Then I have just one more slide. I know I'm going a little bit over.
You might have a question.
Yeah.
What is the couple of days support at 50-day line, or just one day support is good enough for getting more confidence?
So usually I'm looking for a couple of days of supporting actions. Ideally, when it gets to the 50-day, it's going to tighten up. I really sort of look at how orderly was the pullback. So we've had a few where like it gapped or, it came down, it gapped down, and then the next day it gapped way up. So in that situation, I think that's what was happening in mid-February or mid-March. Even though it bounced, because it gapped up and it didn't stabilize near the bottom, I didn't feel comfortable going back in because I thought it might fill that gap. But if it's been coming down in an orderly fashion and it bounces, then sometimes I will initiate more of a pilot, not go in with my full position, but start on a one-day bounce if it came down to the 50-day in an orderly fashion and it wasn't gap down.
Okay, thank you.
And by the way, the Trader's Almanac, that's what it looks like.
I have the same one.
We were comparing Trader's Almanac when I was zooming with the Viba. You can get it. Amazon has it, whatever. I highly recommend it. There are tremendous analysis of how the market performs on a month-by-month basis, what happens during presidential elections. Each day there is an amazing quote. Some of them crack me up too. That some of them are really funny, and some of them are like way too serious. But every single day there's a quote from somebody in the market. And so if you haven't bought one of the Traders Almanacs, and then also I think if you buy it through the organizations, I think you even get invited to some of their webinars and such too.
Interesting. And I also like it because it gives you, like, that's where I'll record what my thoughts are, what my thought process is for when I'm getting in, when I'm getting out. Because I'll put some things on a spreadsheet too, which I'll show you guys. But whenever I travel, I don't take my computer with me a lot of times, but I have the Almanac and it helps me to kind of go back and look at what was my thought process when I'm getting in or getting out.
That's cool.
So that's how I use that. And I do put distribution days in there as well.
Why don't you show us some of the details of how you operate with TQQ? And I think it might be interesting to folks because I asked the question of you when we had the Zoom meeting, and I said, well, do you do like SOXL or some of the others?
And it's not because I'm not interested in it. I definitely want to learn more. It's just that I don't have any new money coming into the market. If I want to buy something, I have to sell something I already have or dip into my 2 to 3 years worth of cash, which I always try to have. So, however, that being said, TQQQ, I think, was really strong from like 2010 or whenever it first came out. But from that point onward, because of the FANG stocks and the Magnificent Seven, now, because of everything that's going on with AI, it might be that SOXL might be what the theme is. And I should have mentioned that earlier when we were talking about sectors and things. So even though I don't necessarily look at sectors, I do look at themes. And I look at like because, I want to try to figure out what is the next emerging trend. AI, everybody is talking about it, and who knows what's going to actually happen with it, but it does have the potential to be like a decade-long or potentially even longer trend that can have a significant difference. So I do own NVIDIA from 2016. I do own individual semiconductor names, but I am going to start looking at SOXL as well. And then just one other quick thing I wanted to mention is about SQQQ. I don't trade SQQQ, and that's because when I first started trading TQQQ, when I would sell TQQQ, I would buy SQQQ, but I would always end up getting stopped out. With TQQQ, you can sell incrementally into strengths and make some money and have a buffer. But with SQQQ in a strong market, the downtrends don't last for many days. Even for IBD, when they say the market is in a correction, after day 4 of an attempted rally, they could change it back to a confirmed uptrend. I found that I was not getting out quick enough and got to a point where I was like, if I can make good gains with TQQQ, I would rather be in cash. And the final thing is, I don't know if any of you guys listen to any of Jim Orpel's interviews, but I'm also an eternal optimist. So it's harder for me when I'm in SQQQ because it just doesn't go well with my personality. I would rather be in cash and leave money on the table than trade SQQQ. But here, I'll go through this really quickly. Another funny story, when Floyd sent me the video that you guys recorded on your approach to TQQQ, I sent him an email because I'd already agreed to come and talk to you guys. I said, can we have a quick call? And I was like, my TQQQ approach, I feel like a kindergartner that's trying to like tell PhD students what I do, because my strategy is basic and simple. It's not back tested. It's trial and error. A lot of it used to be in my head. And this is actually the first year where I'm trying to document the stuff that would be in my head or just like written on a corner of my stock trader's almanac so that I can try to be more systematic about how I go about this. But my strategy is super basic. So basically on my spreadsheet, what I had started to realize over the past couple of years is when I would look at the TQQQ chart and I looked to the left of the chart, I could see peaks and lows. In a strong market, the peaks would last, the uptrend would last for a longer period of time. A downtrend would last for a shorter period of time. But I started to think, okay, if I want to swing trade, I want to try to capture, again, you can't capture the whole move, but if I could consistently capture like 20 to 25% moves a couple of times a year, even if the rest of the time I had to be in cash, you can, if you compound 20 to 25% a couple of times, you can really significantly boost your performance. So that's what my goal was. It wasn't necessarily to get the best number. It was to, what can I do that will only take me a few minutes, that even if I'm traveling, I've been doing a lot of traveling recently, that I can very easily do this wherever I am. So my spreadsheet is very basic. The first column is the date. The second column shows the price. I'm trying to track a low or a high. In market surge, they will sometimes, and a lot of times, like this is happening in real time, in market surge after the fact, so maybe a couple of weeks after the fact, you'll see some of the highs and lows, but I'm trying to do it as it happened. And so sometimes like what you'll see that's great, that's where market surge didn't identify it as a top or bottom, but based on what I was looking at, I identified it as a top or bottom. The third column is the percentage. So it's showing like how much did it peak and how much did it pull back? And that gives me an idea of what I was mentioning earlier that I try to look for when it starts to approach the average. I'm going to start being much more aggressive about selling into strength. This gives me an idea of the overall strength of the market, that if the pullback lasts for a shorter number of days and they tend to be like half or less than what the gain was, then it's telling me that we're making higher highs and higher lows, and overall the market is strong. The duration is just the number of days it lasted. Again, it's trying to give me a sense of how are the uptrends compared to the downtrends. And then the next several columns are the moving averages. I track the 10-day moving average, the 21-day moving average, and the 50-day moving average. The 10-day and the 21-day are more relevant to the shorter term swing trading approach, which I use in the trading championship. In my longer term accounts, I care more about the 50-day. And the percentage is basically just looking at whatever that price was, how does that compare to the 10-day or like the moving average itself. For those people that have purchased market surge, when you go into market surge and you click on the chart, they will tell you the percentage that it varies from the 10-day, 21-day, or 50-day, but they're doing it based on the closing price. And I don't care as much about the closing price as I care about the intraday overall high or low. So that's why I set up the spreadsheet this way. Then I have a column where I track market pulse. So before it used to just be uptrend, under pressure, or correction. Now IBD has gone to different levels of exposure. I don't necessarily know yet how to interpret this based on the results I'm seeing. So I'm just putting it in. When I go back and look at the results after, I can try to get a sense of like, how does this compare to when I think it's time to get in or out. DN represents the distribution days on the NASDAQ. S&P is the distribution days on the S&P. You could see this year there was a lot of divergence. On January 24th, there was only 1 on the NASDAQ, but 7 on the S&P. Those are just things I'm trying to watch to see what does that signify for overall strength or weakness in the market. And then the comments are just my whatever I observed. And again, this I do in real time when the market closes. So things become much more obvious when looking back. The last time I entered something was on March 15th. The green 64.13, that represented the most recent high. The 57.28 represented the most recent pullback from there. Generally, I'm looking for it to pull back 10% or more, and then I'll start looking for signs of strength to get back in. But since March 15th, I've been trading in that 57.28 to 64 range. It hasn't really broken out of that range. So I'm looking to see, does it decisively do something above or below to get some sense of what direction the market is heading. Right now, it's just going sideways in that range. So again, very basic. Most of it was visual and looking at how I did well and how I did poorly. And then I just sort of turned those into the sell rules that I shared in the previous slide. And again, that was just what worked for me. I don't necessarily capture all of the move and I don't get in at the bottom, but I've been able to capture enough a couple of times, sometimes 4, 5, 6 times during the course of a year that it's able to boost my performance.
Well, it's fantastic. There any other questions there, Rick? Viba?
No. Yeah, go ahead.
If
Go ahead.
you don't mind me, this is Sharik. First of all, Vibha, thank you so much for what you've done, and a comment on you saying that comparing us as PhDs to you. All I can say is that if that's the case, then you've proven that keep it simple, stupid is really the way to do it, because you're blowing me away and I'm following our PhD rules. But the question I want to pose to the rest of the membership is that I've followed the stochastics and our rules that we have written down. I see too many opportunities where I could get in a little bit more, sort of game the system. Sometimes I do, sometimes I don't. I'm not a strict rule follower, but I'm very intrigued with how you have shown how you've brought a different facet to working with this TQQQ strategy. I wonder if other people in the group have any thoughts on how they do it, or I'm open to suggestions to improve and learn.
First of all, thank you for introducing me to Floyd. Otherwise, I wouldn't have gotten connected with this group. So thank you for that. And also, one of the most important things I realized is that so much depends upon your own personality, your own time frame, your own way of executing. For me, this is what worked for me, but I can tell you that sometimes I do sit through a lot of volatility, and even my husband, I manage his IRA too. And a lot of times he'll tell me for his IRA, he wants to be in cash way before I'm ready to get out of all our other accounts. So just that's something to keep in mind, is that the best strategy is one that you're able to execute consistently. And that's going to be different things for different people.
Well, I think it's an excellent response there, Viba, because I've been trading for a long time. I did my first trade 62 years ago, and I've been trading ever since, and I'm always on a learning expedition. But one of the key things I've learned is you have to know yourself. You have to know how you respond when you have real money on the line. You have to know how you're going to respond when hopefully we don't hardly ever see this, but occasionally you'll turn on the TV and it says the Dow's down 1,000 points. How are you going to respond to that? Are you going to do panic trades? Are you going to get angry? You can't sleep or whatever. So you need to understand. And sometimes I think some of the best traders have even hired psychologists or others to help them better understand themselves. There's some good books and reading materials out there. If you take baby steps, one of the main thoughts I have is until you have a good sense of confidence, don't invest money that if you lose it, it messes up your life. Don't do that. Invest the money, and hopefully with good sell rules, the pain will be a minimum. But if you were to do some trades, and at the end of the year, you're down $10,000. Is $10,000 something you'd say, well, big deal? Or what if you were down $10,000, would you say, I'm about ready to jump off a bridge? You want to be very careful as you're entering into the trading, especially if you get involved in leveraged ETFs. They go up 3 times as fast, which is beautiful, but they go down 3 times as fast. Understand what the basis is of what makes up TQQ. Like the biggest holding in TQQ as of a month ago was Apple, and then Microsoft, and then Amazon and Broadcom. And SOXL, the main holding was AMD, Broadcom, NVIDIA, FNGU, which last year, FNGU was up 450% last year. FNGU right now, its biggest holding is Meta, but it's been a little bit sad lately because its second biggest holding is Tesla. Tesla hasn't been feeling so well lately. Understand the product that you're trading also.
Yeah, for sure.
I appreciate Viba taking the time. I know it's very late for you there. You've been very gracious to share with us your strategy. And what I'm going to do for everyone is I'm going to send everyone, we have like 640 members in the meetup group. All 640 of you will see a message from me probably on Friday night or Saturday that will have the recording. I'll also have a separate file that will have Viba's slides. If there's no other burning questions, we have a really important agenda item to go forward related to leveraged ETFs, but I'm going to give Viba a chance to say any last words that she would like to say.
No, again, thank you guys so much for having me, and to Shurik for getting me connected to you guys. And he did actually have a question that he wanted other people to weigh in on. So I didn't mean to cut into that. So maybe you can let people answer the question before you move on. But again, I would just say that, like, know yourself, as we talked about. And the best way is you have to try different strategies, see what you're able to execute, do a post-trade analysis. And you do need to look at your strategy over a couple of years, because you want to see how you do in an uptrending market, but you also want to see how you do in a downtrending market, because in an uptrending market, everything looks great. And so it's a little bit harder to know what the best strategy is until you've seen how it works in both up and down trending market.
Yeah, I think it was Warren Buffett said that when the tide goes out, then you know who didn't have their swimming trunks on. Or another one that it's hard for us to get our hands around is when there's blood on the street. That's when you should be buying. And when your beautician or your barber or the taxi driver is talking about stocks, that's probably when you should be selling.
Okay.
So there was an open question there about how other people might trade, but I'm going to ask if we can hold off on that until we do our presentation on leveraged ETFs, because it may answer some of the questions. And so what I'm going to do is jump into a presentation we prepared that is based on some very significant backtesting that's been accomplished recently. Let me share a screen and see if I can bring up. Here we go. So we're going to present for the first time ever, and our strategy has been evolving significantly. For the first time ever, we're going to talk about trading strategies with 6 leveraged exchange traded funds or exchange traded notes. And we're going to talk about improved buy and sell strategies. We have some updated backtesting results. Just make sure everyone knows this is, and can you see the screen there, Rick?
No,
Can't see the screen.
just seeing your
So
wonderful IBD cap.
So sorry, I'm glad I asked the question. Here, let's try this now.
Yes. Now it's coming. There we go. You see it?
Now can you see the PowerPoint?
Yes. I don't know if that's just my machine, but I see it like overfills the screen and I have to zoom out, which I've never had to do before with Zoom.
So anyway, we all know this is for educational purposes only. Any investment, no matter what you get involved in, if it's real estate, art, coins, gold, whatever, all investments have a risk of loss. So just be aware of that. I've had significant help for close to a year now from Rick Keller, and maybe 6 months or longer from Gary Taylor. And Gary's introduced us to TradingView. And so we're going to give a presentation for 7 years of backtesting. And I want to give credit. We've had some major people helping us, especially Eric Reese, Carol C., and Reggie on back testing they've done. But what we're going to be presenting is SOXL, a strategy that shows daily and weekly results. We're adding a brand new factor here showing what the results are if you do or do not take profits when you've made 33% profit on SOXL. For TQQ, same thing. We're going to show you daily, weekly, but here the profit targets are 16% for daily and 19% for weekly. And you might say, well, why are they different? Gary did hundreds of tests of just trial and error and came up with using different percentages and say, what gives me the largest total value at the end of 7 years? We're also going to look at TECL, with and without profit targets, FNGU, which is an exchange traded note. That's the one that was up something like 450% last year. We're going to look at FAS, which is the financial times 3. And also a fairly new vehicle that's out there, an exchange traded note, XXXX. If you haven't heard of that one, that's the S&P 500 times 4. Since it has a short history, I did a bunch of back testing using UPRO, which is the S&P times 3, and then just did a ratio and say if XXX had been trading all the time, how would it have done? So let's just look at some results here. Here's a little plot that shows the SOXL daily strategy with a 33% profit target. So you buy and sell based on the price going down, or if you make a profit, you get out. If you followed the strategy over 7 years, you'd have over $1 million, but you had to do over 200 round trip trades in those 7 years. If you use the weekly strategy with a profit target, it's about 800,000, and then we show dailies. On the far left is my original strategy that we introduced back September of last year that had about 33 trades and made around $250,000 without a profit target. So this is just sort of a comparison that through this evolving strategy that we've been looking at, we had to increase the number of trades, but we significantly increased the performance over that 7-year period. If you look at TQQ, the TQQ daily with a profit target is around 900,000 or so. The orange dots are daily and the red ones are the weekly. Our original TQQ strategy had about the same number of trades as SOXL and made around 200,000 or 300,000. We've introduced some brand new back testing here. This is sort of a busy slide, but we added FNGU, we added TECL, we added FAS, and the yellow square on the bottom left is the 4 X's. This busy slide gives you an idea that over the 7-year period, depending on which strategy you select, will have a huge difference. One thing I noticed from the slide is it looks like, at least on the testing we've done so far, FAS isn't one. I mean, it's been pretty hot for the last 2 or 3 months, but over a 7-year period, this chart shows not all that great a performance. And UPRO expanded out to the 4 X's, didn't have all that lot of a profit. And I think maybe it's because the S&P 500 is spread out over 500 stocks and covers industries that are in the uptrend, industries that are in a downtrend, financial and other things, whereas the leveraged ETFs tend to be more concentrated. And we've been somewhat selective in the ones we're looking at. There's some exchange traded funds that have just done terrible that you wouldn't want to be involved in at all. Gary put this together for us, and through extensive back testing using TradingView, he shows that on the daily strategy, we're using full stochastics rather than the market style stochastics. The factors for the stochastics show right here that the full, which is the 18% K period, you can see from the graphic above, we had to do 220 trades, but with SOXL, with a 33% profit target, we ended up with $1.4 million or 11,000% gain. If you did a buy and hold during that same period, you would only have $56,000. Your 10,000 would have made 56,000 profit.
So it's like 20 times as good as buy and hold. That's remarkable.
And then here's the weekly. And to my surprise, the weekly actually had a few more trades. And instead of making 1.1 million, you made 748,000. So I'm going to go through these pretty quickly. We're going to do a much more detailed discussion of our new procedure at the meetup next month. But here's TQQ, that if you, with only 162 round trip trades, and we're using Market Smith style stochastics with a period of 20, 15, 5. On the weekly, we're using 5, 3, 3. We've got a trailing stop and a prior day stop for TQQ. Anyway, it's almost $1 million. It's 936,000. Buy and hold during that same 7 years would have been 75,000. But we're taking profits at 16%. And what happens is when TQQ goes up 16%, you sell. You take your profit, but you immediately look at the stock graph, you look at the stochastics, and if you're in a buy zone, you buy it back again. The next day, here's the weekly. Let's look at TECL. TECL is somewhat similar to TQQ. Its main holdings are Microsoft, Apple, Broadcom, NVIDIA, Adobe, CRM, AMD, Accenture, Intel, and Cisco. So it's a little bit different than TQQ, but it's sort of like a cousin to it. If you have a taxable account, for example, if you sell TQQ at a loss and then you get a buy signal in less than 30 days, if you want to avoid the IRS forced sale rule, you can just buy TECL instead. And notice that in the 7 years, $1 million, buy and hold was 100,000. We're taking profits at 15% on the weekly. FNGU is an exchange traded note, and FNGU holds 10 companies. It's a little more volatile. A few weeks ago, Snow took a big hit, and Snow was one of the 10 holdings. And so FNGU's performance wasn't so good, but today FNGU went up 7.5% in one day. So we're using Market Smith style stochastics. Here are the periods 22, 2, 2. Set a run down, and FNGU in a 7-year period made 1.411 million. And buy and hold only made 25,000. Notice if you went to the weekly strategy, your profit is 479,000. FAS is the financial times 3. It didn't do so well. We did 333 trades in the strategy and 383,000. Buy and hold lost money. In 7 years, you started with 10,000 and you had less. Using UPRO as a surrogate, I tried to see what would happen if we traded XXX over 7 years. 112,000. Buy and hold was 39,000. So let's look at our updated buy and sell rules. They're very similar, but there's some subtle differences. But your buy rule is you're not going to buy TQQ unless the stochastic fast line on the weekly chart is crossing and it's above the slow line. It has to be higher than the oversold line, which is pretty rare that doesn't happen. But the oversold line is typically around 10 or so in our strategy. Sometimes it's 12, but if both conditions are true, then you buy on a Friday.
At the end of the week.
End of the week. If Friday's a holiday, you buy on Thursday. Sell rule number 1, when the weekly fast line drops on the stochastics, drop below the weekly slow line. And very, very important, the fast line also has to be below the overbought line, which for TQQ on the weekly strategy, that's 37. If both conditions are true, you sell, and you sell at the end of the week, typically Friday. But we also have a rule that if you have a 1-day drop from the prior day close of a certain percentage, then you sell. Or if it happens at the open or intraday, we also have a trailing stop loss based on the highest intraday price since you purchased TQQ, or the rules are similar for SOXL. So if recently TQQ was 61 something, and if you say, I want to have a trailing stop of 20%, you take 20% off. If TQQ hits that number, that's a sell. The new rule is if you're going to set a percent profit target, you sell when you hit that gain. And then the sell rule number 5 is after selling, you immediately look at your buy rule. If you've sold one and you're looking at a repurchase, that can be on any day of the week. If all the criteria are met, strategy, we go for a 1-day drop of 13%, stop loss of 18.1, overbought line was 37, oversold was 10. We're using market style stochastics, 533, exponential moving average. We have 33 round trip trades. In 7 years, it made a profit of 267,858. We had an alternate strategy that had a higher number of trades. It made a little more money, not substantially more. SOXL rules would be very similar to this. For those interested in TradingView, Gary did an excellent presentation back in December, and he's held one training session. And if you're not familiar with TradingView, it's a very powerful tool that you could use for leverage ETFs. And if you would like to know more about TradingView, if you'd like to participate, here's Gary's email address. Notice there's not an E in the word trader. Be sure to include your TradingView username in your request to Gary, and then he can get you hooked up. He's going to do another trading session.
So basically, Floyd, we're talking about Gary giving access to anybody who wants it, giving access to
the stochastic trading system that we have. He can give you links and down trades so that you have access to trade the way we do. You know, for example, I'm going to show you, some of you use Thinkorswim, so I'm going to bring up a Thinkorswim screen, and then I'll show you a TradingView screen. So let's see, I think it's this one. So this is SOXL on Thinkorswim. Let me do TQQQ. And I manually put in all the buy and sell signals. So back on November 3rd, we had a hey, be sweet to me, okay? I'm a very sensitive guy here. You believe that? I'm an engineer. I'm not sensitive. Look, let's see.
He's
Now
from
can-
Alaska. He's going to be tough.
Now can you see?
Not yet. Nope.
What am I doing wrong? Let's see. Let's try one more time. I'm saying sure.
You got it. You got it right before. Just do what you did then.
And
Your trades don't go this way.
let's try this. Now can you see it?
Yes.
So I manually put in where we were buying and selling using a program. This is the Market Smith style stochastic. So on Friday, November 3rd, we had a buy signal using the weekly strategy. And we did not get a sell signal. It was a very short duration sell until March 15th. And then the following week, we got a buy signal and we're still in TQQ. This run right here returned about 50 or 60%. I cheated a little bit. And I bought on November 1. And when I sold here on the 15th, that was a 72% profit run, which is pretty fantastic. So this is what your swim looks like. Let's see if I can show you TradingView. I think I got to bring TradingView up first. Okay, here we go. Most of you probably have seen it, but if you haven't, we'll show you what TradingView looks like.
There we go. There's TradingView.
Can you see TradingView now?
Yes.
So this is SOXL, and Gary can do a training session. This is extremely powerful, and this is where we put in the factor of taking profits at 33%. And over here, see where it says 235,000 on this particular series that we're looking at. This one made trades. We can look at the list of trades, etc. So there's a lot of powerful tools out there that are just very, very, very helpful to us. If you haven't heard our September presentation, Rick and I put together a presentation last year. If you send me an email and request the link, my email is tqqqinvestor@gmail.com. If you send me an email and say, I want to watch the video in September, we roll out the whole program of how to effectively use stochastics to make buy and sell decisions. I can send you that video. If you're interested in TradingView, I've been trading leveraged ETFs for 11 or 12 years. I think you can tell I'm 100% sold on it, but you have to use caution. These are not instruments that you don't want to put $100,000 in and then take a trip to the Bahamas and come back in 6 months. These are meant to be relatively short-term trading instruments. They move with the market. If you're in a long-term uptrend, you could go to the Bahamas and forget about it, but you don't know. We have no idea if the market's going to be up next week or not. If you're going to trade these instruments, you want to have solid rules. And my advice is, if you're going to follow the system and you say, okay, I'm going to follow the rules, this is where you get to know yourself. This is where you get to know your personality, because if we get the sell signal and you say, I think I'll wait another day, then you're not following the rules. And sometimes when you don't follow the rule, you think you're smart because you make more money. But it's something to be a challenge. There's nothing magic about what we've developed here on the stochastic strategy. I welcome you to find any strategy that works for you and your personality. Write some rules down, back test them, and go what works for you. So I'm going to stop and open it up to questions here.
There's a couple of questions, Floyd, for you in here. Could you share the backtest strategy pages? I take that to mean the slides.
From September?
No, I think he's talking about the ones you showed tonight.
Everyone that is a member of my meetup group, and there's about 650 of you, you're going to get a link to my slides, in addition to Viba slides and the recording. And you'll probably get that Friday night or Saturday. If you're not a meetup member, either join the meetup group and then you'll get my message, or send an email to me, tqqqinvestor@gmail.com, and I will send you the link to slides and recordings.
Yep. Somebody else asked, JMC asked, will the updated TV script, TradingView script, be updated for existing users? I think the answer to that is yes.
Gary is going to, if he hasn't already done so, roll out a link. He's got a user group of about 25 or 30 people. And I believe as he does updates, he rolls the updated script out, and then you use that on TradingView and you'll have any modification that Gary's made to the strategy.
This is Gary. I did make a notification in the chat, but everything is up to date now as far as the script.
So when Gary sends you the link in TradingView, you just open it up in TradingView, click on the strategy, and then you can apply it right to your charts and run the strategy. It's pretty straightforward.
TradingView is pretty powerful. And if you want to trade leveraged ETFs and you'd like to have a systematic way of doing that, Gary's system and his training would put you well on your way.
Somebody else asked about TOS. Can we get the setup for TOS? I can answer that, Floyd, by saying, basically, I tried to program TOS to do our strategies, but TOS fell short. It doesn't do all the features that we have. And that's one reason why we went with TradingView. We had coding for the stochastics indicator as it's programmed in MarketSmith, which uses a different calculation than regular stochastics. We had shared that back in September and in some of the other meetups. And that's really all we did in Thinkorswim. We couldn't put the whole strategy together because it doesn't support all our rules. So we've stopped any sort of development in Thinkorswim, and we're concentrating all our efforts in TradingView.
But I am willing, if someone sends me an email, I am willing to share my screen. And if you want to use Thinkorswim, you can. Someone asked to see Gary's email again. Here it is, pvtrader without an E at gmail.com. Any other questions?
Nope, that's about it. Somebody asked, when is Gary doing the training? I don't think we've scheduled that yet.
If you have a question, you can unmute yourself and ask.
Hey, can you hear me okay?
Yes.
We haven't scheduled it yet. I've been asking for input from people as far as anything specific they would like to see as part of the training. I've been collecting that, but I would imagine it'll be sometime in the next few weeks, probably a couple weeks from now or so.
Question for me?
Yeah. So, I mean, great to see the backtesting work you guys have done for the last 7 years.
Thank you.
Have you guys done any work, or anybody has done any work for backtesting from 2010 to 2015? The reason for asking that question is SOXL has done really good because semiconductor industry as a whole took off around 2015 to 2016 timeframe. But before that, if you go and do the backtesting, I believe it will not come as a top performer. In fact, TQQQ might come as a top performer.
I think SOXL didn't IPO until several years later. I forget what year it IPO'd, but don't I have that right? Didn't it come out? I'm going to pull up a monthly chart. SOXL IPO'd on, I'm sorry. It is 2010. So Gary, I guess maybe you can answer the question. Have you looked at the back test from 2010 to 2015? If not, it'd be easy to do.
Some of our users have done that. I've looked at 2015 specifically, which was a very tough year. I would encourage anybody that gets the strategy and starts using it on TradingView to do this as well. Look at different years, look at different time periods, because you need to feel comfortable with how this works and understand that different symbols or instruments are going to work differently in different environments.
And 2023 was challenging for some of these levers ETFs also. And then when we had the COVID crisis, there was that huge drop. I think TQQQ dropped 60, 70%, but no one knew. That was a buying opportunity of a lifetime. The recovery from the COVID sell-off was like a gift from God. If someone had $1 million on TQQ, they would have been smiling. From March to September, I forget how much it went up, but didn't it go up like 400% or something?
Something like that, yeah. 380 or 400%.
I mean, what a champion. She is a champion, right? She is a champion. She stayed with us the whole time here. Any last questions? We're going to meet next month and roll out much more detail on our strategy. Everyone knows we do not meet June, July, August because it's crazy up here in Alaska. I'd rather be fishing and camping and doing meetups. So we'll do a May meetup and then we don't do it again until September.
Seemed like Gary had something else to add, but
yeah. Got a question or a comment? You're on mute, Gary.
you're muted, Gary.
Gary, unmute.
Sorry about that. Click the video instead of a mute. I was just going to mention that anyone that does back testing, it's not sufficient to just look at a 7-year period as in the examples Floyd showed you tonight. It's important to look at the individual years as well within that period. There's a thing called in testing and out testing where you look at specific periods within a back test period to see if the results hold up during those periods, similar to what you would expect for the overall period. And the same thing would be true for out testing, where you select we looked at the 7-year period specifically, but also looked at the 2015 year, which wasn't part of that 7-year period, to get a sense for how some of our strategies would do during that particular year. I can't stress enough that if you get this on TradingView and start working with it, start looking at all these different things to get a sense of how the strategies work in different time periods, and look at on a year-by-year basis as if you're starting it fresh in a new calendar year to see how it would work for that year. And that'll give you a whole different perspective. That's very important.
But one important point, Gary, everyone needs to understand what I'm saying next. I've done thousands of back tests. Before I met these guys, I used to do it by hand, and it would take me hours to do one back test. And now, thanks to these guys, I can do it in like 2 seconds. The point is, until you start using your own money and you got real money on the line and you see what happens, like yesterday, we looked like we were headed for sell signals for SOXL and TQQQ. And it looked like today or tomorrow we were going to sell these babies. Things were going crazy on us. And then today, the fast line goes like this. It's unbelievable until you experience this on a day-to-day basis where you really understand how your personality, your fears, your greed, your emotion will affect how you behave. And I tell you what, write down your own rules and try to follow those. And if you can't follow them, then you need a different rule. You need a different rule. Once you start dealing with real money and you get emotions involved, and if you've got a best friend or a spouse or whatever, and you're saying, oh, I don't want to tell them how bad I did today, something's not working if that's what you're saying. And you have to realize that when you trade, there will be times when you lose money. Don't let that upset you. If you have a good sell rule, the losses will be controllable, and you look for that next opportunity. But backtesting is wonderful. And I totally believe in it. Once you put real money on the line, the backtesting gives you the foundation for making those good decisions.
I have one question for Viba. How do you track your betting average and reward to risk ratio?
Hours charged. Hi, yes, I do.
Would you share that?
Yes, sure. Read my account. In my trading account, the results are a little bit lower because I do more active trading there, whereas in my brokerage account, I let it last longer. In my trading account, I actually shared this with Richard, so I have to go back and confirm the numbers. But in 2023, my results weren't that great with individual stocks because a lot of them weren't meeting my criteria, but I was buying them anyways. I did a total of 10 trades round trip in 2023. 3 were winners and 7 were losers. But my gains for the winners were 5 times what they were for the losers. So I still ended up with a strong return overall. In 2022, I didn't trade. In 2021, my batting average was just around 50%. I can't remember the exact number of trades I did, but it was like one trade below 50%. My winners were 4 times what my losers were.
Thanks for sharing that.
That's a good question. I guess the one point I will make, unless you actually enter a contest, we're not in a contest. It shouldn't matter to you if Rick does better than somebody, or Gary does better, or Anil does better. Just go by what works for you. And if you're making money and you're comfortable making money, who cares if the guy down the street made 10% more? It's really not a contest. The contest you have is you against the market. That's the contest.
Yeah, exactly.
And a nickname for the market is the Great Humiliator.
And that's a great point to me, where the reward to risk ratio is important and where the batting average is important, is because that helps you understand what your gains are relative to your losses. And that concept came from Mark Minervini, because what he was saying is that if you want to make money long term, you have to lose less than you make, and you have to be able to repeat that consistently. So it's more for that reason that when people would say to him, okay, where do you set your target for your profits? He said, well, first I look at how much I'm losing. And, like first I need to be able to protect my losses. So it kind of came from that.
No, that's an excellent point. I think we're about out of time here. This has been an excellent session. I am so grateful to you, Vibha, for sharing your strategy and how you operate. You operate very differently than many of us do. If we can share, we're all in this together, and we learn from each other. We're all going to be better by taking a little piece of this and a little piece of that. But again, you have to apply it to your personality. Thanks, everyone. Have a great evening. Blessings on all of you. Happy trading. We're all in this together as a family. The market can drive you crazy at times, but if you have some good rules, it's controllable. Thanks, everyone. I'll send out the recording. I'll send Viba's slides. I'll send my slides. And if anyone wants that September presentation, just let me know at TQQinvestor@gmail.com. Yes, Viba.
Sorry, my slides might not have all the proper trademarks and copyrights because I just did them really quickly before I sent them to you. So just please be aware that for Market Surge or for IBD, I don't think I might have documented them properly, but just so you all know.
Gotcha.
I'll make a PDF of it also. I don't know if what you sent me was a PDF, but if it's not, I'll make a.
It wasn't, yeah. It was just a regular slide. So if you could
I'll-
PDF it, that would be great.
I'll make a PDF of it. And I just say, everyone be respectful when we share our slides. Remember, educational purposes only. Take responsibility for your own trades, etc. Thanks so much. We had a great crew out tonight, and we'll probably have another 100 people watch the recording, if not more.
Insurance charged.
And go out and enjoy life. That's it. We're going to sign off. Thank you.
Thank you.
So much appreciative, Viba, for you helping us here. Thank you.
Yeah, thank you very much, Viba.
Thank you all.
And good night, everyone.
Good night.